Hi, I'm Gwen Preston of Resource Maven, and I have a few comments on why we might need to be cautious on gold in the short term. So the question right now is the spring run already done? The price of gold gained 4.3% in 2 weeks following the Federal Reserve's interest rate hike. And that surge made sense. Gold had slid significantly going into the hike as the dollar strengthened, so a gold recovery was in the cards, and the timing coincided with the start of what is usually a strong season for gold and gold equities, which is the spring. That's great. The question now is it already done? The problem is that 4% rise in gold brought the price to $12.50. It's a nice number, it's a round number, but it's also a number that presents some technical resistance for gold. In gold's bull run so far, since the start of 2016, 2050 or 1250 has presented resistance to the rise of gold several times already. It turns out also that another important technical barrier for gold, which is its 200-day moving average, is almost the same. It's about 1260. So what we're seeing right now is gold rise up to that 1250 level and then just sort of sit there. It's having trouble breaking up through that double technical barrier. If it does break up above 1260, then I think we could be looking at another few good weeks for gold in this spring run. Unfortunately, I don't necessarily think that that's what's likely to happen. If you want to take another piece of evidence, look at the GDX, the index of gold miners. It is basically flat so far this year versus a price of gold that's up 10%. That suggests that instead of miners providing leverage on the price of gold, multiples to gold gains, the opposite is what we're actually seeing. Miners are not reflecting even the gains in the yellow metal. That simply suggests some weakness in this run, and it might mean that the spring run is done. Taking a step back, that spring run being almost done only matters for those who trade gold on a seasonal level. If you want to get in and out of the market based on seasonal moves, you need to take caution right now. For those who are gold believers in a buy and hold perspective, we're still looking very good. The latest sort of golden reason for that is the response when Trump's Obamacare repeal and replace move failed completely, right? Trump pulled that piece of legislation because it was clear he was not going to get support to pass it. Now, that's very significant. The entire reason that the US markets ran so strongly after Trump was elected was because America now had this capitalist president who was going to cut corporate and marginal tax rates deeply, except that in his administration's first attempt to pass a centerpiece item of legislation, the Affordable Care Act repeal and replace, it failed. If they can't reform healthcare, are they going to be able to reform the tax code? It's a reasonable question to ask, and it's a question that strikes right at the heart of the Trump bump as it existed. So what I'm saying is reality is kind of seeping back in to the US markets. And unless Trump can demonstrate a legislative win and demonstrate it pretty soon, that reality is going to become more and more of a force. It'll be enough of a force that it wouldn't be surprising to see the S&P slide back to pre-election levels. That would be a 10% slide, which is significant. And to a market that hasn't seen a slide like that in a long time, in years, it's going to feel a lot worse than that. Now, should that transpire, miners would get drawn down. It's a baby in the bathwater thing, right? Investors sell everything, and gold equities would get sold alongside stocks, but gold itself would come out the other end a lot stronger. So all I'm saying is that gold in the long run still looks very good. We have all of the normal reasons that I talk about all the time: negative real interest rates, very slow GDP growth, rising inflation, and lots of political uncertainty. And then we add into it some more recent reasons to lack confidence in global equity or in American equities. So in the long term, gold is still looking very good. You just might want to have some caution in the short term because technical resistance is posing a real barrier for gold in this spring run.